What's up there YouTube? Welcome to my channel. This is the Frugal Investor. In this video, I am going to give you guys an analysis of my favorite stock to hold in my portfolio. Now this stock, it is a dividend stock, it is a bank stock, it is a financial stock, and it is none other than JP Morgan and Chase. With that said, let's get right into it. JP Morgan and Chase has come out to be a winner during this pandemic. This strong balance sheet, strong leadership has caused investors who were looking away during the pandemic from the banking sector, from the financial sector, from this company in general. It has forced them to look towards it back again as it is available at such great prices, such well managed financial balance sheet, and such a great leadership. And those investors are now forced to buy this stock at a very higher price than it was available during the pandemic. Thanks to the bank's disciplined approach towards using their capital, the bank has come out to be a winner. They are the largest bank in the United States. Investing in this company, for me, I feel like I'm investing in the United States government itself. The CEO is Jamie Dimon. And this bank, it is a leader in its space. So that provides a huge moat for new investors who are looking to invest in safe, stable companies which pay out great dividend over time. The CEO, he's well respected along the banking community, even in his own bank. If you go to retail banking, people are very fond of him in the retail banks of the CEO, and that shows that the CEO is a great person overall. The revenue of the bank is diversified across three major sectors, or you can call them three lines of business. That is, number one is consumer and business banking, number two is home lending, and number three is card and auto. Now, consumer and business banking, which is retail banking, followed with business transactions and business loans and all the kind of good stuff, is their biggest income producer. That is the thing that got hit during the pandemic, and that's why their top line and their bottom line got down, and they lost a little bit of money on their top line, which will go back in a minute. But this is their biggest line of business, consumer and business banking, followed by card and auto, and followed by home lending. Before we get to the numbers and the nitty gritty, let me show you something spicy. So as we can see right here, the total debt on the bank is $765 billion, and the amount of cash they have on hand is $1.51 trillion. Now, every time I see that, it makes me so excited that I'm investing in this company, because that is just the most secure position you can ask for your business. They have so much cash, they can cover the debt any day they want. So that is a very secure position that the bank put itself in during this pandemic, when the government was forcing them to put money, cash away in case something bad happens, people start defaulting on their loans. And that is the reason this is one of my biggest holdings in my portfolio, which I will show you towards the end of this video. Let's look at the numbers. If you look at their top line during the pandemic year, that is 2020, their top line did go down quite a bit from the previous year, which is 2019, by almost $7 billion. Now, there are a couple of reasons for that. The number one reason is their consumer and retail banking and business banking was hit hard because people were not walking in, and a lot of business was lost because of that, because that is their biggest banking segment, as I told you. If we look at their net income also did go down by almost $7 billion, because, and the second reason for that is because they're putting a lot of cash away. They're stocking a lot of cash in case something bad happens. And that is why their numbers did go down during this pandemic year, which is a good thing and a bad thing, because they're securing themselves in case anything bad happens. But their revenue did go down because the banks were closed. If we look at their stock price during the past year, the stock is up by almost 45%. Now, the reason for this rise is because the bank has getting a lot of its business back during the first quarter of the year 2021. So during the previous quarter in 2020, their revenues were 28 billion, while in the year 2021, during the first quarter, their revenues went up by 14% and are now equal to $32 billion. So that is a huge jump. Now, banks are an amazing way to look at the performance of the economy. Banks give us a real insight in how the economy is doing, how the businesses are doing, and JP Morgan is the biggest bank in the United States. So we can look at it and we can tell how the economy is doing. So the bank is making good money. That means the economy is making good money. People are borrowing more money. People are depositing more money. So that is a good sign that the economy is coming back. And we can look at that by looking at this bank quarter balance sheet, and the revenue has gone up. So that is a really great sign that the bank is recovering. JP Morgan is also a dividend aristocrat. They have been paying their dividend now for 25 years consecutively. The dividend yield currently is 2.18%, and the annual payout per stock is $3.60, and the payout ratio is 27.60%. So that is a good payout ratio because they have a lot of room to grow in the future if they do decide to increase their dividend, which they do annually. And the 5-year growth rate is 15.39%. They pay out their dividend quarterly. So it is a great stable dividend payer, triple A safe rated, this bank, and it is one of the best dividend holders that an investor, whether you're beginner or advanced, can hold in your portfolio because it is almost like investing in the United States government. As I told you, the bank has been paying out their dividends for almost 25 years, starting in 1996. So that makes it a dividend aristocrat. Now, that is the performance, that is the numbers, that is how the bank is doing, that is Jamie Dimon's, how he's managed the bank, how they're managing their capital, which is great. They're doing very, very well. And I am a big believer. I'm very bullish on JP Morgan and Chase that it will continue to do so well because it's so well managed and they have such a moat. They're the leaders in their space. Those are my opinions in which I think that this bank is a great investment. Number one, they have a lot of cash on hand. They manage their capital really well. They have a very great CEO, Jamie Dimon, very well respected and very smart person. Number three, they are the leaders in their space. They have a huge moat like that. Number four is because they are a very well trusted brand. They have a very popular brand name, and whatever they support, whatever they put their logo on it, it's a trust factor that comes in it. So those are my opinion why I think this company will continue to do well in the coming future when the economy is growing and growing and growing and it's getting hot and it's warming up and it's growing. The banks will continue to do well. Currently, I hold about 66 stocks of JP Morgan and Chase. My buy price is $137 and currently it's $162.94. The P by E ratio for JP Morgan is 12.8. Now, even at this high price, now as I mentioned in the beginning of the video, the people were running away from the banking stocks during the pandemic because they thought that people would be defaulting on their loans and banks will be losing a lot of money. But even at this price, the bank is available at a cheap P by E ratio, good P by E ratio, and the people that were running away are now coming back and are buying at these higher prices. So if you are an investor who got into this bank, who was watching my videos and who got into this bank at this price, which is $137, there we go. You got a good price and you can hold it for the long term because this bank will continue to grow and do better as the economy does better. So even at this price, it is a great price to buy this bank, even at this price, because the P by E ratio is such a low number, 12.8. It is available at such a great price. Even at this point, it is a very good entry point to buy JP Morgan and Chase. So that was my analysis. As you can see, I'm up by 35% in the past 6 months on this stock, and I'm continuing to buy. I'm not stopping because I think that I will continue to buy. I will continue to buy more and more and more and more because the P/by ratio is so good and the bank is doing good and the business is good, the leadership is good, and everything is good. They have a lot of cash in hand. So that was my 2 cents on JP Morgan and Chase. Guys, if you like this type of content, leave me a like, comment, and subscribe to the channel. Thank you for watching. This is the Frugal Investor signing out.